Bismillahirrahmanirrahim. In this third video, expenses, let's try to directly jump to the topic. Expenses means when you spend something. In other words, decrease to the equity from cost of providing products or services to the customer. Like what happens in expenses, your equity mean all your earnings, all your money in the business, your owner's money, it decreases. Why? Because you have to provide goods or services, whether you are making something like mobile or bottle or anything, or you providing some services, you have to make some cost, and that is expense. You have to, for example, if you're making bottles, you have to spend 50, 80, 70,000 on manufacturing at least one bottle. That is it. You are incurring some expense. Does not need to be paid in cash yet. You are making 100 bottles, you are purchasing material, and you are saying, when I will sell those bottles, then I will give you the price of the raw material. So maybe cash has not been paid yet. However, you have to record in your books about that expense. You have incurred the expense because it is in equity, or the cost that you have to bear to provide the services or goods or bottles. You know, examples include rent, income taxes, utility, payrolls. You purchase these things, you pay anything that that decreases your income, right? You have to pick the expenses from. It's very simple. Like depreciation is an expense, for example. Then accounting equation. It's very basic, very fundamental equation of accounting. You have to be, very familiar with this. Assets, like I believe you are quite familiar with those terms. That's why I'm making series of videos. Assets, they are always equal to the liabilities or the stockholders, owners, you know, the capital owner or the shareholder. And for example, if there is only one shareholder, he will be the owner, he will be the stockholder. Equity, you can say, or the whole capital. So assets, for example, are, I will elaborate that equation with example also. So assets, they have to be equal to all the obligations which are which are on your business. Then all the wealth. So wealth plus obligations, they should be equal to assets. We can expand this equation like in this form. You can say, let me highlight it first. Okay, like assets, they're equal to liabilities plus owner's contribution, my money if you're owner, minus owner's withdrawal. If I withdraw 10,000 for my own personal usage, then withdrawals plus revenues, all the earnings minus all the cost or the expenses. So it's quite simple, but it's in expanded form. Owner withdrawal and expenses. When these accounts increases, overall it will be decreased. Owner's withdrawal means when I withdraw something, when I get some money out of the business for my personal use. So the higher the withdrawals, definitely the expenses will be higher. So this, with all those concepts that we discussed earlier in the previous videos also, you should be well aware with this accounting equation. For instance, here are some examples. An owner, he is investing $20,000 in his or her company. If she is a female owner, then what will happen? Cash asset will increase with the debit, and owner's capital, one owner, so we can also say whole capital is the equity with increase in credit. Why cash is going, or why we have to write the cash on the debit side with an increase in S. Cash is also an asset. When we will make some videos on the posting, or how we manage the books, the video on bookkeeping, I will definitely tell you how to generate general entries. Right now, you should remember all the assets and all the expenses. If they increase, you have to make a debit entry in the general journal. And if the assets, either in cash form, either in material form, either in table form, either in employees form, either in goodwill form, in any form, if assets decrease, then you have to make an entry on the credit side. So if $20,000 I invest in my business. My asset or cash account increases with the debit, and on the other side, the obligation on the business is also increasing. This is the second, side, the double entry concept. So this is an obligation on the business that these 20,000 have been invested in me, and I have to pay back to my own. So this, the capital also increases, and whenever capital, you have to treat it like a liability. So listen the second rule. Whenever liabilities or your profit or your capital increases, you have to make a credit entry. So this will go to the credit side. Then company purchase 2,000 computers, assets are increasing. We will say assets are increasing with debit entry, and cash is going. So anything that goes away from your business, like liability, it goes away. It has to be, paid. So it will. It's always a credit entry. So cash decreases, cash is going, so cash is a credit. Company pays $500 salary to employee. So salaries and wages, I told you assets and expense, when they will increase, we will make a debit. So increase with the debit of $500, and cash is, is being used to pay off the salaries. So cash, the other asset, the other aspect of the transaction is you have to decrease the cash in credit, because cash is an asset, and decrease in asset should be dealt with credit. So let's move to next. This is also called double entry system. When recording a financial transaction, you must have at least one debit and one credit side. We will be quite more familiar with this concept when we will make and practically do general journal entries, and then we will post it into the ledger. Classification will also be done here. And then on, we'll move trial balance, and definitely on income statement. You also called it P&L account and balance sheet completed. Can have multiple debit and multiple credits. Why not? All transaction must balance, meaning total debits must equal to total credits, because this is a mandatory requirement. When these things will be total, then definitely all the assets will be equal to whole capital and all the liabilities. You know, debits and credit side. Debits are let always on the left side of T account, or journal on the left side, represent an increase to assets and decrease to liabilities and equity, as I told you earlier. And credit on the right side, like here, you can say this is the credit side, represent an increase to liability and equity or profit. I also told you, and a decrease to assets. This is the rule of it. Okay. And normal balance, what makes the account increase? Normal balance means what happens with those things. Assets, normal balance is always debit. Liabilities, normal balance is always credit, because I said when these things will increase, credit will happen. When asset will increase, debit will happen. Assets and expenses increase, debit, normal balance. This is liability, equity, capital, profit. When they increase, credit balance will happen. Credit side will be marked. This is normal. Equity increase, credit balance. Revenue, normal revenue, profit, credit balance. Expenses when increase, debit balance. Owner's equity, owner's withdrawal. These are called, personal, drawings for personal usage. These are also debit balance, because those are also expenses in, other form. Uh, I will, let's try to complete this video in this session. Most companies operate on calendar year operating cycle. Yes, cutoff is December 31. In Pakistan, cutoff time, as I told you in the first video or second video in as well, it's 1st of June, July, and 30th of June. It's the last day. Transaction after the cutoff are recorded in subsequent period, means on the next accounting cycle. Accruals, any earned revenue or accrued expenses that have not been recorded at cut-off period, because accruals, they are the advanced, as we discussed in previously about the concept of accrual and deferral. Deferral, any cash received that has not been earned, any payment for expenses that have not been used. As I gave you the example of restaurant, you pay the amount, but you have not used their services. and they have received the cash, but they have not yet earned it because they have not provided the services yet. So you can refer to that example. So I hope it will serve your purpose. So I think let's complete the video here, and in the next video we will move to some new other concept.